Hi and welcome to another edition of TraderCast's Daily Market Report. Anybody who trades euro dollar is keeping an eye on FOMC meeting on Wednesday, 18th of March at 18:00 GMT. Obviously, most of the market analysts are pointing to a potential parity in this pair. The word patience in FOMC statements would be quite telling, and market participants might react to that word being kept within the statement or taken out and so on. So the initial support is at a current low, which is at 0.460. 10460. Loss of that level could potentially open up the way for a retest of that or a challenge towards that parity level. Any oversold bounce backs are initially capped by 10840, which is just a cluster of these previous lows and small consolidation, followed by 111. Gold does appear to be coiling. Yet again, it is in clearly defined downtrend. Dollar strength, the gold weakness. Initial support is at 1150. A red candle closing here below 1150 in an hourly or a 4-hourly time frame could potentially indicate a further bearishness, and in that case 1142 and 1132 would be seen as the logical support areas. On the other side, a breakout outside this current consolidation pattern could potentially retest further upside resistance towards 1167, followed by 1173 and 1180. This is FTSE 100. FTSE does appear to be creating an oversold bounce back, and now this does appear to be a flag or a flag information, although fairly deep retracement. The important levels for Monday or for the next week is around here at 67.54. As long as the price stays above that pivotal level or a point of control area, we could potentially see price moving slightly higher to retest this current highs at 67.90 followed by 68.04, and these would be seen as a logical resistance. Only a confirmed breakout and a 4-hourly or a hourly or a daily candle closing above 68.04 could potentially target further upside resistances towards 68.40, 68.43 followed by 68.66, 67. The other alternative is if the price action pushes lower and loses the support of this 67.54 and especially 67.32, then potentially the price can target further downside support towards 6,700 followed by 6,670, even 6,650. This is S&P 500. The price action does appear to be a little bit more complex than FTSE. Obviously, we had a fairly decent rally and then a massive sell-off on Friday. Yet again, dollar strength, euro weakness. But we have a contract rollovers. We have quadruple witching next week as well, and we have a big meeting with FOMC on Wednesday. So a number of important things from the economic calendar point of view and from the fundamental side which might impact S&P. So the current low at 2045 would be seen as a logical support. Only a loss of that 2045 could target further downside support towards 2040 followed by 2030 or 2020. The other alternative is a rally from the current 2052 high and a potential challenge towards 2061, 2068, which would reference these previous close highs and also this wicks. This would offer some logical resistance on the upside. Only a confirmed breakout and a 4-hourly or a daily candle closing above 2068 could potentially target further upside resistance towards 2079, 2084 and even 2088 half. Good luck with your trading, stay safe and stay in touch, and I'll talk to you next week.